Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, TGI Friday, and welcome to the last weekend of August. This morning, we'll be taking a look at exciting stock market news and a few notable earnings reports, along with which stocks are this morning's biggest gainers and losers. Don't forget to check us out over on TikTok as well under the username TipRanks for quick news updates too. Now let's get right into this morning's exciting stock market news. U.S. stock futures are currently in the red as investors await to hear from the Federal Reserve at the Jackson Hole Economic Symposium. Federal Reserve Chairman Jerome Powell is expected to speak at 10 a.m. Eastern Standard Time. Right now, Dow futures are down 0.24%, S&P 500 futures down 0.41%, and NASDAQ futures down 0.53%. The SEC is adding a new layer of transparency as they're implementing a rule that requires companies to show shareholders how executive pay relates to the company's financial performance. SEC Chair Gary Gensler said that today's rule makes it easier for shareholders to assess a public company's decision-making with respect to its executive compensation policies. Companies will now have to compare top executives' pay to the stock's total return, the company's net profit, and other measures of financial performance used by the company to tie pay to performance. Electronic Arts is on the rise this morning on reports that Amazon will be making a bid for the company today. This comes as Amazon has been making moves towards the digital and gaming world. The move, if successful, would mean that Amazon would own some of the really big franchises in gaming, such as FIFA, Madden, Battlefield, and plenty more. It has been rumored that EA has been a possible target of other big companies such as Apple and Disney as well. Analysts currently rate the EA stock a moderate buy with an average upside of 18%. T-Mobile is teaming up with Elon Musk's SpaceX to use satellites to bring more service to remote areas. The two companies will work together to use SpaceX's Starlink satellites to provide connections to T-Mobile cell phones across the U.S., especially in areas that have no current wireless service. The goal of the partnership is to provide voice and data services anywhere, regardless of cell towers, allowing areas not yet reached by wireless networks to get service. Elon Musk said that it means no dead zones anywhere in the world for your cell phones. The T-Mobile stock is rated a unanimous strong buy with an average upside of 18%. And shares of Seagen are falling in the pre-market this morning after Bloomberg reported that talks with Merck & Co. to acquire the company may have stalled. It had been previously reported that Merck & Company was looking to purchase Seagen at about $40 billion, making it one of their largest deals of the year. But now it's been reported that the companies may be having issues agreeing on a price. Merck's acquisition of Seagen could help broaden the company's lineup of cancer drugs. Of course, the two could still come to an agreement and the merger could still resume. Analysts rate the Seagen stock a moderate buy with an average upside of 11%, while the Merck stock is rated a moderate buy with an upside just shy of 11%. Now moving over to notable earnings reports. Friday is quite quiet for earnings, but last night we did hear from buy now, pay later company Affirm Holdings. Their stock is dropping after posting a wider than expected loss and disappointing future guidance. While revenue of $364.1 million did top the analyst estimates, their earnings per share was a 65-cent loss, which was wider than the 57-cent loss estimated. For fiscal year 2023, they're now expecting revenue between $1.63 to $1.73 billion. This was lower than the $1.9 billion estimated previously. Analysts currently rate the Affirm stock a hold with an average upside of 11%. We also heard from Workday. Their stock is on the rise this morning after they posted better than expected results for their quarter. The company also maintained their full-year guidance. For their second quarter, they posted revenue of $1.54 billion, ahead of the estimates of $1.52 billion and up 22% year-over-year. They reported earnings of 83 cents per share, ahead of the estimates of 79 cents per share. Analysts currently rate the stock a strong buy with an average upside of over 32%. Marvell Technologies is down slightly in the pre-market. Their earnings came out in line with expectations, but their sales guidance was a bit soft. They reported Q2 earnings of 57 cents, 1 cent ahead of the analyst estimates, and revenue of $1.52 billion, which was in line with expectations. For their third quarter, they're expecting sales of $1.56 billion, plus or minus 3%. This was shy of the analyst estimates of $1.58 billion. Analysts do currently rate the Marvell stock a strong buy with an average upside of over 31%. And Ulta Beauty is on the rise this morning after they posted better than expected results and slightly increased their future guidance. Revenue rose nearly 17% year over year to $2.3 billion, beating the estimates of $2.2 billion. They reported earnings per share of $5.70, well ahead of the analyst estimates for $4.99. For the full year, they're now expecting to see revenue of $9.65 to $9.75 billion compared to their previous forecast of $9.35 to $9.55 billion. Analysts currently rate the Ulta Beauty stock a strong buy with an average upside of 15%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Farfetch. They reported a narrower than expected loss for their Q2 on the heels of the announcement that they'd be acquiring a 47.5% stake in an Italian luxury designer. Under the ticker FTCH, the stock is up over 14%. They're followed by Electronic Arts under the ticker EA, up 13.75%, and Workday under the ticker WDAY, up 11.5%. Our biggest losers this morning are led by Affirm Holdings following their earnings report. Under the ticker AFRM, the stock is down 13.5%. They're followed by CGen under the ticker SGEN, down 10.5%, and OpenText under OTEX, down 9.85%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments. I always appreciate hearing from you guys. Thank you all for watching. I hope you have a wonderful weekend, and I'll see you back here next time.